us at TFNN, educating investors.
This is TFNN, the Tiger Financial News Network. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning, your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Dave Ruth, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Wow! Welcome, folks. Tom's out this afternoon. Tommy O'Brien here filling in for the hour, and we'll kick things off. Quite an hour we should see, folks. Interesting action, to say the least. We'll see if the market can hold these gains. We've had action in both directions today. Whether you're bearish or whether you're bullish in this market, folks, you ride the momentum when you catch a ride. And boy, we have had some moves in the markets. S&P's right now sitting positive by 67 points, trading at 38.32. That's up 1.8%. You get the NQs up 197 points right now, 12,650. The Dow up 1.7% or 515 points at 31,393. And the Russell right now up 1.4%. All the indices basically erasing the entire trading day's losses yesterday. And that's after accelerating lower intraday today. Let's go for an analysis quickly of the S&P 500. I mean, we are bumping right up almost near the point to the highs we had yesterday. Noon Eastern time, you're trading at 38.42 in the S&Ps. You trade down a staggering 122 S&P points intraday, making a low of 37.20. We'll fast forward to this morning. We get jobless data, non-farm payrolls coming in. Decent number. We had 379,000 jobs in the month of February. The market pushes to a high. Pre-market, we pushed to a high of 38.14, and just like that, you fall out of bed. For the first, basically, hour and 45 minutes of trading from 9:15 up until about 11:15, call it even 2 hours of trading from just before the market opened, you reach a low intraday of 37.28, and then how about it, folks? There is only two red bars on a 15-minute basis, both of them not that small, for the entire trading day since 11:15. The trend is one way. It's been upward, and we are now remarkably more than 100 S&P points off of the lows and basically right up against this level. Going to be a critical level with 60 minutes left to go. To market participants want to be long coming into the weekend. We got a lot to talk about in the final hour of trading. Let's kick things off. I mean, of all the things going on, right, we got a little bit of a stall going on over in the Senate for the stimulus deal. Democrats' $1.9 trillion relief plan stalls in the Senate amid an impasse over unemployment aid. I don't expect the market be too freaked out about this. It's obviously not too freaked out right now with the market action we're getting. Senate Democrats have agreed to cut the weekly unemployment insurance supplement to their $1.9 trillion coronavirus relief bill, but extend it for a longer period of time. However, you have moderate Democrat Senator Joe Manchin reluctant to back the policy, a little bit of back and forth. I think is pricing that in as well. But nonetheless, coming into a Friday, coming in a little while in both directions. A little bit of fear in this market as we reach higher yields. Let's jump to the yield in that conversation. The 10-year, we reached a yield in the 10-year on a 0.62%, a pretty staggering yield on the 10-year, causing some pause for some of the growth stocks in particular. Can they to grow at a staggering rate they have if the price to borrow money increases. Now, as we're seeing, I'm seeing a little bit of a slowdown in my system right now, keeping up in terms of the program. But this will happen sometimes when we get some fast markets, and we're getting them right now in a big way, with the S&Ps holding up at about 70 points in the positive. A little choppy, unfortunately. All right, thanks for that heads up. We may need to reset that at the break. Going on in the markets, folks. My computer trying to keep up in a big way and struggling, unfortunately, right now. Come on, baby. Come on. It's an important 60 minutes out there. Yeah, they're struggling on me. Maybe we'll kick back in. All right, well, let's jump around to what other news I had out there being talked. One of the graphs in terms of the economic data, so jobs data out here. 379,000 jobs added in 6,000 jobs added in the food service industry. Now, if you eliminate leisure is going to have to pick up all of the slack and then some, folks. You see what they do? You got leisure and hospitality in the blue, the dark blue we'll call it, maybe even navy. Continuing to decline on the other side. Basically, what that's saying is that many businesses, and this is one take on it, have begun to bring back their jobs already, right? There has not been as much of an acceleration. Now, this may all change in the next few months as vaccines start to become more prevalent, as we get over that hump. The news coming out this week, every American will have access to a vaccine by the end of May. But interesting, nonetheless, we got a strong number on the payrolls front. You always hear the headline number, right? Headline number, 379,000. We beat expectations. You get into it, and you could say it's all about leisure and hospitality, as it should be. We're still about 10 million jobs under the price level, under the employment level that we had coming into the COVID pandemic. We're at about 143 million jobs in the non-farm payroll number. We were at about 150 COVID. And there we go. My chart's catching up a bit. So we get the S&Ps up about points right now. Still getting a little bit choppy data out here. We get the NASDAQ 100 up about 187, Dow up 508 with about 47 minutes to go in trading action. Jumping around to some of the big tech stocks out there. In terms of earnings, we had Broadcom out with their numbers last night. They're up about 1.2% today. We had Costco out with their numbers last night as well. All the way down to 307. We're back to within about 1% at 316. Let's check out some of those tech stocks. How about Amazon? Dropping $100 and getting it all back, right at around $3,000 on Amazon right now. Apple shares, we're down to 117. You're back positive for the day on Apple at 121. Google has been so resilient. Check out the chart in Google, up 2.5%. You put Google on a daily. And yeah, I was going to say, almost making all-time highs right now on Google. We make a high today of 21.13, the all-time high 21.52. Google behaving better than almost any other tech stock out there. And we got to talk about Tesla. The woes continue. Talk about a pullback, folks. We are now right at a 618 retracement of the entire run-up that it had from November 17th. Remarkable acceleration. I believe that was when they said that they were going to gain entry to the S&P 500. Boy, we'll talk about Bitcoin as well when we got back. Bitcoin under 50,000 at 49,325. Stay tuned, folks. 877-927-6648. Give us a call. Right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, welcome back, folks. We got the markets in positive territory. S&P is positive by 64 right now. NASDAQ 100 up by 185. Quite a resurgence from the lows we had earlier today, putting the S&P just on a daily for some perspective here. You back things up. I mean, the run that began at the beginning of November, that's when we first started to get the news of the efficacy of the vaccines. The clarity became apparent in terms of when we would get out of this COVID pandemic. Before November 1st, folks, we didn't even know what the efficacy would be like of some of these vaccines. We've come a far way from November 1st to basically in the beginning of March. We're now basically 90 days away from every American having access to the vaccines. We accelerate from a price level. I'm going to back this up even a bit. Remove that. Whether you go from a price of, we begin that run at about 3,200. We make it up, folks, 759 points in the S&Ps. You see the first pullback we got, making a low February 1st, right to the 382. We almost made it back down to that level yet again. The lows of yesterday, 3720. We're sitting 111 points above that level right now. All things considered, we're about 130 points away from all-time highs in the S&P at a time when we have 10 million less people in the job market employed, according to non-farm payrolls out this morning for the month of February. We're going to have to see quite an increase in that over the next 3 or 4 months, folks. The estimations, when you get into where we're going to be in terms of the market, talking about the jobs numbers, and again, we're going to have to see an enormous surge in leisure and hospitality employment once we come back, because we're talking about restaurants, we're talking about hotels, right? We're talking about that entire industry where people have been laid off, and what's going to be the timetable for those jobs coming back. Boy, when you talk about the expectation, I mean, we're definitely going to have some estimates for non-farm payrolls for the months out, whether it's, I might not say March because we're not there yet, maybe it's April, May, June. There's going to be estimates for 1 million plus jobs, maybe 2 million plus jobs. There should be when you think that we're 10 million below the line. That will be some volatile times, folks. Get ready for it. We're seeing the beginning of that right now as the market's struggling a bit to see where we're going to go, especially as we see rising yields in the face of it all. All right, jumping around to Bitcoin a little bit. Mr. John McAfee, the antivirus software creator. He's a character upon himself in a big way, but he has been indicted on cryptocurrency fraud charges. So federal prosecutors accused antivirus software company founder McAfee and his associates of orchestrating a fraudulent scheme to rake in millions of dollars from cryptocurrency investors. He and his crypto team engaged in the age-old pump and dump scheme. The pair used McAfee's popular Twitter account to tout various cryptocurrencies through false and misleading statements to conceal their true self-interested motives. I talked about this a little bit on my program this morning, not this story in particular, but I talked about the story of regulations, and it had to do with one of the bills or something President Trump passed on his way out, basically saying that you had to know who was behind each cryptocurrency transaction. The reason behind that has to do with whether it's tracking the flow of funds to keep track of terrorism, whether it's tracking the flow of funds to make sure Uncle Sam gets his money at the end of the year, okay? And you're seeing the beginning, as in the federal government is not going to be okay with anonymity in a financial instrument to the tune of billions, if not approaching trillions of dollars. It's just not going to happen, folks. Now, this market's going to face a little headwind in a big way as you start to see the government, and this is just one example of the type of behavior that's a reason why the government is going to clamp down and make sure that they can track what's going on. They're not going to be okay with not controlling the money supply, number one. They're not going to be okay with not tracking the flow of funds, number two. Bitcoin is an impediment to both of those. It's part of the reason why it's accelerated so much so far. It's part of the reason why they may get some oversight in the near-term future. Now, interesting when you look at, quite a run indeed. You have Brian Armstrong out there. He started Coinbase, I believe, right? Yes, Coinbase CEO. How about this pay package? Approximately almost $15 billion. His stake's $15 billion, but his pay package is going to be to the tune of $3 billion. Now, listen, you start a company and you have equity in that company. You deserve all the equity that you have. You deserve it all because you started the company. When you start talking about pay packages that reward billions, I mean, Elon Musk comes to mind as well. That's where, the discussion gets a little bit murkier. Now, this guy, a brilliant guy. He started one of the biggest exchanges out there for crypto, Coinbase. I've used that site myself, and I'm not big into crypto at all, but I have used it. Armstrong could be in line for a windfall of more than $3 billion over the next 10 years. It's basically worth more than $1 million a day every single day for the next 10 years, and that is his pay as a CEO, not his equity stake as a founder. A very big difference there. The astronomical award, the latest example, is so-called founder grants, big blocks of equity handed to founders of companies preparing to go public. Boards of startups typically say such deals are needed to keep the founders around. Questionable. And this has to do basically with having options. He founded the company in 2012. He received 9.3 million options in August. Again, very important how long this has been around. Equal to roughly 3.8% of the company. They came to an exercise price of $23.49, which the company determined was the fair value of the firm's shares at the time. Well, right now, they're pricing those shares between about $200 and $400. It's possible with the run that crypto has had since then. But, folks, Coinbase was an enormously popular company already in August. I mean, you back up Bitcoin to where we were in August, okay? What are we talking about? This is the full run up here. I guess we do have to back it up a little more. Let me go back. August, we're talking about Bitcoin was at 12,000, all right? It was already very prevalent. People, in terms of the established place that Coinbase had within the crypto market, I'd say they were already a market leader. Yes, there's a dramatic rise since then, but my goodness, paying a founder out of a company that's going to have shareholders $3 billion when they already have a $12 billion stake, it's just remarkable. Let's put it that way. We'll jump to the other man who's got quite a pay package as CEO, Mr. Elon Musk. You talk about a haircut, folks. How about losing? We're now under $900, the all-time hit print Elon gets into some gets into some Bitcoin action. You now have Tesla backing up, down more than 33%. I mean, we're getting into some murky territory here. Even if you take the run, as I mentioned, from where we were at the start of November 16th, you rise up to a level of 900. We're backing right to the 618 from that number. I believe that's where they gained entry into the S&P 500. You got to back things up all the way to this price point here, folks, which correlates to 270. Okay, this was the last time. Now, this is when Tesla announced a stock split. Okay, so they announced a stock split in August. They announced that they're in the S&P 500 in November. The stock trades from 270 after their split to 900. Yes, they had some great earnings during that time, but a lot of that was just optimism of a stock split, which somehow sent the shares almost doubling from 270 500 on its own. And then S&P 500 entry, that one has some big acceleration as well. But here's the day that it went into the S&P 500, folks, December 18th. We did 222 million shares. The share price ended at about 695. You made it up to 900. Now you're at 595. Stay tuned, folks. We'll be right back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I got to chart up a Tesla here, finishing the conversation. So remarkable when you look at the valuation and the drop we've had. Tesla right now, you jump over to the Analyze tab on the Thinkorswim platform, $573 billion market cap as of currently 3:30 p.m. Eastern time. Just checking out one of the articles in here. When you look at the run that we've had in Tesla, where are we? Oh, did I close it out? Maybe I did close it out. Tesla had been up to almost $900 billion. Talk about a haircut and a loss of about $300 billion just in this company alone as volatility persists. And be interesting to see where we go from here. We're now back chopping around to where we were in December. I mean, the next stop is that gap that we're sitting basically from November when it came into the S&P 500. And you got to remember, folks, Tesla was already a behemoth. Coming into August, sitting at about 270. This is a split-adjusted price that we've all gotten used to. But if it had not split, it'd be a staggering price level. It was 4 for 1 or 5 for 1. It's failing me right now because Apple had one at the same time. What ended up happening was Apple announced the stock split on their earnings. And I think Elon said, yeah, that's a great idea, man. Let's split as well. They split, so 270 up to 900, folks, mostly fueled by a stock split and an addition to the S&P 500. All right, jumping around to some of the stocks making moves today, I wanted to talk about one in particular, and that was Virgin Galactic. So you got a filing out here from the chairman of the company, okay? Chamath Palihapitiya sold his personal holdings of 6.2 million shares for about $213 million. He still owns 15.8 million shares through an investment with a partner. He says out there that it's just a plan to redirect the sale into a large investment he's making towards fighting climate change. That's quite a PR spin on a chairman dumping his entire personal stake in a company. And the one thing I want to stress here is if you're the chairman of the company and you sell your entire stake, he's a smart guy. He knows this is going to hurt that company. He knows it's going to get pummeled. When you have the chairman selling 200 plus million shares of the company, you have it down 10.6% today. You see the drop that it's had, okay? In a big way in terms of where he got out of this thing. Now, when you're a billionaire to that tune, folks, he could have loaned against that. He could have taken a loan against that position if he still believed in Virgin Galactic as the chairman of the company, not to dump his entire stake in the market. All right, there's numbers of ways that you can free up cash flow, free up liquidity while not selling your assets, especially when you're in that level of wealth. The fact that he did not do that and he's still entertaining that he's the chairman of this company and he's dumping hundreds of millions of dollars worth of shares into the public market after it had this epic run up. Be very wary of that equity, folks. You jump over to the Analyze tab, Virgin Galactic, you're talking about a company valued at about $6.4 billion right now. We'll see where we are, but you're talking about more than a 50% haircut from where we were trading just on February 11th in that company. Insider trading, always something you want to take into a consideration, folks, and very rarely do you see a chairman of a company dumping his entire personal stake in that company. So pay attention to that one on Virgin Galactic in a big way. Arc Innovation, Kathy Woods, man, her PR person, because she's at the top of every list every time. I kind of don't understand it, folks. She's had quite a run in a big way, okay? She basically loaded the house on tech stocks, which, my goodness, talk about an acceleration. She rides it up to 160, okay? But this thing just lost. What is that? We're down. we were down at a low today of 106. You had lost almost 55. What is that? That's going to be 35% that she had lost in that fund from February 16th. You were down to a price level in that fund today of 106.25. Guess what? We were within 10 cents of where we were in October in that fund. If you want exposure to all the biggest tech stocks, including Tesla and the likes, it's a great ETF to be in it. But be careful of this fund, folks, because I've talked about it many times on the show before. When you're dealing with, I think she's up to tens of billions of dollars, $40 billion, $50 billion. Now, that's going to decrease dramatically from this drop-off. This is maybe near towards the top. And she needs to list her trades on a daily basis. That's going to allow, you can't build positions in the type of fund she's managing in one day. So what she has to do is she has to build positions over time. Brilliant people on Wall Street are going to be watching her transactions. They're going to be trying to establish when she's selling. They're going to be trying to establish when she's buying and building a position. They might try and beat her to the punch on both occasions. Very difficult to manage that type of money when you have to disclose your trading on a daily basis, which is what she has to do in this ETF. You're seeing quite a pullback here down to 116 from 160. We just talked about Tesla. Tesla pulled back from 900 to below 600. It's tantalizing, it's interesting, but I kind of don't get the fascination on a daily basis of all of these. You're talking about Tesla, you're talking about Roku, Baidu, CRISPR, right? We know how accelerated they've been. We know the pullbacks they've had and the volatility they face. Norwegian, the reopening trade. Norwegian pushing out some shares. How about 47.6 million shares at $30 a pop? NCLH. Norwegian taking advantage of the acceleration we just had. We were just trading at $22 February 1st. You make it up to $34.49 yesterday. Norwegian pushes out almost 50 million shares at $30. You're talking about $1.5 billion that they raise. They're going to use that money to expire some debt, I believe. Yeah, they're going to plan it to use the funds to repurchase debt, shore up their balance sheet, make sure they get over this rough period of time during COVID. The reopening trades, folks, they're there, and they're still going on. We got a long way to go. You're seeing it in Norwegian right now. Not all roses, right? You could say, let's put this back on a 3-year weekly to get the full drop-off. How about that drop-off? From 59.78 in the start of January, things really escalate February 17th. You fall out of bed to $7 by the week of March 16th. We're back to $30. You could make the argument that eventually cruising will return to a post-COVID reality, much like prior to COVID in normal function. That would mean these stocks have some room to appreciate. Doesn't mean they're going to happen just yet, folks. You're seeing Norwegian suffer today. We saw Carnival trading lower as well, to the tune of about 6%. We're still off. Same thing on Carnival, about 50% of the price we were prior to COVID. You jump over some of the airlines. As you're seeing the tech stocks, the S&P, they're all accelerating higher. We're seeing a pullback on some of the reopening trades. You have American down about 3%. Delta, maybe the strongest airline out there, down 1.8%. Delta was sitting near about $60 before they fell out of bed early in the year. We're trading at $46 after being at $17. My goodness, right? We'll check out some of the domestic fares. JetBlue, almost making it all the way back. That would make sense. Domestic travel is going to become much quicker back to a normal form than international travel. We're going to get there, but internationally, we got a lot of countries to take care of. And we don't have to take care of them, but they have to get vaccinated before you have normal international travel taking place. Hopefully we get back to normal domestic travel sometime soon. JetBlue, almost back to that level. I talked about on my show last night. I was looking at JetBlue fares just yesterday. They have some great deals out there still, folks, but they're running out right now. I think JetBlue, you only have until the end of this month to make a purchase where you can make changes completely free. It's like a free roll, folks. Go out there, plan a trip 4 months, 5 months into the future, whenever you're comfortable, right? If it doesn't happen, you can change it for free. You might even be able to cancel it for free. Check that out, because those deals are about to end. We're coming out of this. There's going to be a rush to the spectrum to do some traveling, and the deals are still there, but we're coming towards the end of that. You're seeing it in JetBlue. Look at that run, almost back to pre-COVID levels, and look at Southwest, right back to pre-COVID levels as well. That's telling you everything we need to know, folks. Domestic travel, it's coming back right now. If you're going to be booking some fares, get it done. I can't wait to be doing some travel. That's right. All right, folks, stay tuned. We got markets. They're not stopping. How about the NQs right now? Up 226 points. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. We got the S&Ps up 74 points right now. We got the Dow up 577. Remarkable that in the S&Ps, we just climbed above the intraday high yesterday in the S&Ps. That high, 38.41. We just make a high intraday right now, 38.45. You're talking about to the tune of 110 points down, back up, all around. We got about 18 minutes left to go in the trading day, and we got a call. Let's go to Eddie and Boca Raton. Eddie, good afternoon, man. How we doing?
Hey, Tom. Good, Tom. How you doing, buddy?
I'm doing great, man. Thanks for calling. How's beautiful east coast of Florida, Boca, doing this afternoon?
It's gorgeous, man. It's beautiful here.
We got a nice one.
Paradise.
We got a nice one out there today. I know. What are we going to take a look at, man?
It's just two things. Tom Sr. called it, man, on the Qs. He said it's going to 297. As soon as it hit 297, it market reversed. It's just amazing how this all works, you know. And so my question is, looking at the Qs and the composite or the NQs.
Sure.
Is this what's called a key reversal day, when you go down so much and then it just reverses, and then it gives you cover for the market to continue to go higher, or when we wake up Monday morning, this thing's back down again?
Boy, you know, it's tough. I mean, I know he talks about that all the time, and you'll have to give him a call. He'll be back in the saddle on Monday, man. And, yeah, quite the turnaround we got this morning. The only reason that gives me a little bit of pause, man, is we got some volume today. We got some volume yesterday, both right down at these lows. And we've been chopping around a lot. Surprising that we get it all back, right, yet today from yesterday's action. But kind of what I was talking about at the start of the show, and I'm tying in the fundamentals with the technicals of it, we got a lot of volatility to go, man. This market's struggling a bit right now with how to value everything. You know, probably rightfully so, man. How do you value these tech stocks when we just had yields go from almost 0.5% to 1.6% in no time? How do you value some of the growth stocks that have accelerated so much over the last year? When what happens to Amazon's growth rate over the next year? Amazon's going to be fine. You know, they're one of my strongest companies in the long run. But what happens to some of those huge tech stocks that have accelerated? Because normally the market's great at price and growth, right? They know exactly the estimates of where you are this year, where you are next year, what's your multiple, what are we going to assign that a multiple on an ongoing basis. And meanwhile, I mean, you still have companies that aren't giving guidance for the next fiscal year right now, which is kind of, I almost, you could have faulted anybody at the beginning of pandemic if they didn't pull their guidance, because you were able to do it without getting penalized. And CEOs are kind of still trying to use that to their benefit. And you should probably be able to make some pretty great estimates right now because of how sure we are in the efficacy, how sure we are now what looks like the supply of when it's coming, right? So we know when stores are going to be back open, but there's still a lot of volatility, in fairness to them. So we've been chopping around a lot, Eddie, and I don't think we're out of the woods yet, and I don't know where we're going to be, but volatility in both ways, I think, is what you can anticipate really for the next 3 or 4 months, man. Because I can't wait for one of those days that we're coming towards the end of this COVID pandemic in the next 2 or 3 months when we got a non-farm payroll number that's going to be expected to be gangbusters. And if we don't deliver, man, watch out. That's the real fear in this market, is that there's a lot of optimism priced in for a rebound. And it's time to pay the piper, man. We're here. We're 10 million jobs under where we were a year ago. And we're about to get vaccines out to every American that wants them in the next 90 days. Well, that's right. So that's the fear that I try and wrap my head around. With that said, man, you get these types of exacerbated lows in some of these tech stocks, man. If you're a long-term buyer, I don't know. Now, so how are you trading the Qs, Eddie? Are you looking just short-term for a bounce? Are you looking for something, for a little longer term? What are you looking at?
I've been in the Qs and took a big hit I didn't sell, but I'm happy about this rebound. It's like I'm questioning whether just to get out now or when you look at the chart and you see the lows put in are the lows put in for today, and again, I'm not sure I understand what the key reversal day means, but I've seen this before. You got this heavy downdraft, and then it reverses back up, and then it seems like it's good for the next few days or a week or so, to go a little higher. But
I mean, the tough part here is, we're just bumping up kind of. I have a chart of the NQs up here, and we're sitting at 12,678. The low of February 26th, Eddie, so going back about a week ago, right? All we've done is just kind of erase this week. It was already kind of rough, going from 13,900 down to 12,600. That was the actual low, like the intraday low, not even the close we got, which was 12,900. 12,662 I have on the low. We're sitting at 12,671, 667.
Right.
So I'm not sure. I see a lot of volatility. I see a lot of strength in these tech stocks in the long term. But when we have rising yields that are just going gangbusters, man, every company, especially the growth companies, are used to free money across the board. We got yields rising. We have the reopening of society going on like we've never experienced before. But I did talk about it on my program, man. Some of these stocks, I was talking about it early in the day in terms of if you're looking for positions, man, Amazon at 3,000 right now, you've been chopping around. You're basically back to a level of July 6th. Which is remarkable when we're at March 6th, in terms of the consolidation, because Amazon's in a great spot, man. The world has changed forever. We're much more used to ordering things online. The cloud is intertwined in our lives forever going forward, as far as anybody knows. And you've gotten some pullbacks, man, that are pretty substantial. Even Apple down to 121. You're again back to where we were in August prices. So quite the consolidation on a longer-term basis, man. You could definitely start to nibble. So that feeds what you're saying, as in, I see higher prices at some point in the future. But if you're kind of worried over the next 2 or 3 months, man, then maybe you take a little off the table, because I don't think we're out of the woods. You can't say you're out of the woods, let's put it this way, in my opinion, when all we did was get back yesterday's losses. And the 2 days prior than that, on March 2nd, we were sitting up there at 13,328. So, yeah, it's a strong day, because it's especially a strong day on Friday, right? There's no fear going long over the weekend right now.
Yeah, exactly. Going into the weekend, you would figure, I thought it was going to be a bigger disaster today.
I totally agree, man, especially when, things look pretty optimistic. Just putting on 15-minute this morning, right? You kind of got the 8:30 jobs number. It accelerated higher. The market opens. That's really where demand and supply start to show themselves, and it falls out of bed. And I said, oh, it's not over, right? That's literally, I'm watching it too. I said, it's not over, man. This is, and that's, so it's encouraging. Yeah. I would agree.
Hey, you have time for one more question?
Definitely, man. What are we looking at?
It's about the airlines. You mentioned JetBlue, and I'm looking at the chart too. It's close to its pre-COVID levels.
Yeah.
Do these airlines, do they go past their pre-COVID levels, especially a domestic airline, which you figure, like you said, international travel, people are probably going to pull back on for a while still, and would that drive more traffic domestically, hence drive the players like JetBlue and Southwest higher than
it's
the
possible.
pre-COVID level?
It definitely is. And I struggle with some companies that are over that level, right, in terms of like Gap, for instance. I kind of struggle right now with Gap being 50% over its price tag from prior to COVID, just being in that sector. But, yeah, I was looking at JetBlue myself last night, man. I'm going to have my mom flying down when she's vaccinated from Boston. You can book flights right now without any change fees. I can't wait to go bring my new son up to Boston, right? I'm going to, every chance I get, I'm going to be traveling. So I could see that. I could, definitely.
By the way, congratulations on your son.
Thanks so much, man. And thank you for calling, man. I appreciate it. Have a great weekend, Eddie.
I love you guys, man.
Thank you, man. Love you, too. We'll be right back,
Sharpening
folks.
your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of the S&P on a daily basis right now. From the lows we had today, we're talking about in the S&P's 3728. You're up about 120 points. Folks, you're talking about 3.3%. The S&P has risen since the lows of the day. That low taking place at about 11 a.m. Eastern time, basically right when I got off the air, 11:15 this morning. It's been a one-way rocket ship. And like Eddie was saying, you got to pay attention, and I agree with him, coming into on a Friday, because most of the times you get this type of a sell-off across the board. There's some fear that the sell-off persists over the weekend, right, that trend continues. Do you want to be trapped in a market that you can't get out of on Saturday, on Sunday, and you're just holding your fingers and hoping that the futures don't pummel you on Sunday night? Not quite the case, folks, not quite the case at all. And what I look at this market right now is we got a two-way market, all right? You look at some of the trading ranges that we've had. There's some substantial price levels that we've bounced around at. I mean, look at where I would never have imagined that we would have got it all back from yesterday. You're talking about 120 points, but I mean, there's even here this morning, we're sitting at 38.10. We drive down. Where do we drive down to, folks? Exactly where we were overnight. These areas are consistently testing themselves, support and resistance, whether it's support turning into resistance, resistance turning into support. 37.20 was the low. We don't quite make it down to that level. We turn around right where we were at about 10 o'clock last night. That price level, about 37.32, or 107 points above that level, higher across the board. We'll jump to the volatility index. Talk about getting sucked out of the market. We were at 30 this morning, the VIX at 24.82, but we've seen this choppy action. Just putting it on a 20-day hourly. I mean, the VIX, my goodness, right? From 21 to 30, back down to a 22 handle to 30 in no time. You jump over to the S&Ps. These moves don't look as large as they are because they're just so magnificent when you pull up the entire chart. The all-time high, February 15th. I mean, look at the bounces we've had. Whether you go back to February 25th, you're talking about 120-point moves in the S&Ps on multiple occasions in both directions, folks. Keep your stops in place. Get some defined risk in your markets if you can, in your trades, and be alive for that next trade, folks, because we have an exciting market going forward for the next X amount of months, X amount of years with this pricing market. Thanks so much for tuning in, folks. Have a great weekend.